Head of Sustainable and Impact Investing at AGI, Franklin Henrik, who is the Head of Portfolio Origination and Management at the Nordic Development Fund, and also from Folksam, we have Michael Kjeller. We're going to be hearing as well very happily from the Minister of Finance in a moment, Pierre Gramegna from Luxembourg, and later from Koen, who is the Director General of the International Partnerships Department at the European Commission. But without further ado, let's find out a little bit more about what this fund is all about. And
of introducing the fund together with Martin from AGI. So AGI and the EIB are launching today the MCAF, the Emerging Market Climate Action Fund. This is a public partnership, public-private partnership together with the government of Luxembourg, the government of Germany, the Nordic Development Fund, Allianz, Folksam, and EIB as anchor investors. What is MCAF? MCAF is a fund of funds that is aiming at supporting climate mitigation, adaptation, and access to electricity in emerging markets. It is an impact investing initiative aimed at mobilizing capital to get investments off the ground in regions like Africa, Asia, Latin America, and the Middle East. MCAF is building itself on very strong managing partners and building on the experience gained over the years by the EIB, the largest multilateral financing institution, and AGI, the leading global asset manager, in investing in climate action funds in emerging markets. And this strong partnership has proven itself during the development of the initiative and certainly now during the execution. But the MCAF is more than just a partnership between EIB and AGI. It's as I mentioned, a private-public partnership. So it is a layered fund where the junior tranches that are 1/3 of the total capital are going to provide a cushion and de-risk private investors, which represent 2/3 of the capital stack of the fund. And this is a proven structure to attract private investor to a space that otherwise would be considered too risky. And also a proven structure to leverage the amount of money that is available to invest in very needed project. And I think here numbers are emblematic, and I would like to mention them. So with €1 of public capital, this will leverage up to 50, even more than €50 of investment from other sources, and more importantly, up to 10 billion of investments on the ground. So that's why we consider MCAF as a lighthouse initiative, so a flagship initiative to fill the climate financing gap, which I would stress the fact that this climate financing gap requires innovative solution to be able to allow for the capital that is needed. We heard during the conference that what is needed is in the order of 1 trillion per annum of investment in climate action projects in emerging markets. And this is an amount that can only be reached if the private sector investors are also participating. So MCAF itself has already secured its first closing. The second closing and the final closing, it's actually foreseen for the first half of 2022. The fund has already has already raised investments from 3 senior investors and 3 junior investors. But what is most important is that the fund has already a very strong pipeline, and most probably the first investment is going to be approved before year end. So that's why it's an initiative that is certainly a lighthouse initiative, and it's open to other partners to join the initiative, which is already ongoing and up and running. So I will stop here and give the floor to Martin Ewald, the lead portfolio manager at AGI, who will explain to us in details the structure of this fund of funds. Thank you, Martin.
Thank you, Milena. Thanks for handing over, and thanks for the starting words. We started working on this project 2 years ago. As I said, I'm Martin Ewald. I'm responsible for the structuring of the vehicle and then also for the operations. And as we're so proud of that structure, we want to show it to you. It looks rather simple on screen, but as Milena just said, like we already had our first closing last week. So on the left-hand side, you do see the capital stack. So we have a senior tranche amounting up to 400 million euro, and we have a junior tranche currently of 55 million euro. As we're 1/3, 2/3, so 1/3 junior, 2/3 senior right now. So therefore, also our first closing was at 165 million. And as we worked so nicely together over the last years and also in the closing of that, like we also are quite happy that we can drop some words also on the partners we work together with. Of course, there's Allianz, our mothership, one of the leading insurers, also very active, also backing our Allianz GI finance structures, doing a lot in climate change and adaptation and mitigation. We're very happy that we have Folksam on board. We all know them, very active in the Net Zero Asset Owner Alliance. They're one of the largest Swedish insurance companies, insuring every second person in Sweden, and have really a strong pedigree also on the climate side of things. The European Investment Bank, I guess, like in this context, wouldn't need too much of an introduction, but nevertheless, we're working in 3 capacities now with the European Investment Bank on MCAF. One is on the advisory side, where we are working together with Gunther Fischer at Klesen and team, but also then on the investment side, both senior and junior. And then, of course, very important for us is the German Ministry of the Environment, Bundesministerium für Umwelt, in conjunction also with the great work we have been doing and can be doing with KfW. So therefore, also quite happy that we have Jan-Martin Witte also joining, where we really are grateful for this backing and for the very pragmatic approach. Likewise, Luxembourg Ministry of the Environment, it's really was constantly challenging for all of us to set up the fund, but all of that really was done in a superb way. And then, of course, like the Nordic Development Fund, where we're really happy to have you on board. And so therefore, for us, as we now start to invest, and we're operating a similar structure in Africa Grow within my team, we very much looking forward to that. And I'm the only one who's allowed to speak, but Peter Ellersig from my team did all the heavy lifting, so he also certainly needs to be mentioned in this context. So, and then I guess I hand over back to the panel, and I'm very much looking forward to the discussion.
Thank you very much, Martin. Thank you very much as well, Melina as well. Well, we promised that you were going to hear from Pierre Gramegna, the Minister of Finance for Luxembourg. So before we hear a little more from our guests here, I'd like to ask my colleague there to run our video of, which is a message from Pierre Gramegna. And I think we're going to do that now. And in a moment.
Ladies and gentlemen, I'm glad to be able to addressing you through technology, not being able to be there in presence. I was in Glasgow a couple of days ago and had meetings with finance ministers, but I couldn't stay as long, and I'm glad I can deliver this message to you. The idea here is obviously to see how we can crowd in the private sector in order to mobilize sufficient capital for climate change. Now, let's face it, we're not talking anymore about climate change, but we are in the middle of a climate crisis. I think the word underlies the emergency to act. Now, before talking of what we can do, we must also be aware that we must avoid the risks entailed in all these actions. We need to be credible and avoid what I call a tricky triangle. The tricky triangle is that we need to avoid greenwashing on the one hand. We need to avoid stranded assets which could come from the remanaging of portfolios and greening of portfolios. And thirdly, we need to avoid social stranding that could come from the shifting of labor forces and closures of fossil fuel plants. Now, the private sector is key here, and I would like to underline that we also need to be innovative, and one way to do this is obviously blended financing. Now, Luxembourg has had a very good experience in this with the European Investment Bank. We've been both pioneers in this by putting together a climate finance platform with 150 million that both the European Investment Bank and the Luxembourg government have made available. With that, we are able to leverage projects to the height of 3 billion euro. This is a quite impressive multiplier effect. How can we do that? Obviously by taking the first risk, and by that ensuring that projects that otherwise would not have been bankable become possible and attractive for the private capital. Now, today I'm proud to announce that the Luxembourg government is going to participate into the Emerging Market Climate Action Fund, which is a great new initiative of the European Investment Bank, the Luxembourg government, and also Allianz. There we have an innovative structure. It is a fund of funds that is investing in projects, be it in adaptation or in mitigation of climate risks. And this fund of fund structure obviously is an extraordinary multiplier effect, and that is very welcome. So we're very happy that we can participate to this new initiative and announce it on the occasion of COP26. And I think it shows that blended finance is one way out of the climate crisis.
You'll relay our thanks to the Minister. I know he's not there live. Carole, you won't mind if I ask Jochen Flasbarth to give us some thoughts. I know you're in a bit of a rush, so we won't hold it against you if you make a quick getaway. We're delighted to have you with us. Your governments are actually negotiating over there, and you know, both in terms of your national policies, your contributions, but also what you can do to help mobilize the international community. To what extent do you see a fund like this as being helpful in that broader push? And why did Germany, from the Ministry of the Environment, why did Germany decide to actually put your investments behind it?
Yeah, thanks a lot. It's tremendously important. Actually, without these tools, we will not meet our targets. It's impossible. We need a lot more of international cooperation between the global north and the global south, between south-south, and mutually work to reach our targets, which is now more and more accepted around the world to be the 1.5 instead of the 2 degrees. And we have just been, Carole and I, at a meeting of the HACS, the High Ambition Coalition, to remember how it started, and that mutual implementation is really at the very heart of the Paris Agreement. So over the last weeks and months, I worked a bit on finance, much more than I ever expected, to come up with this climate 100 billion delivery plan together with Jonathan Wilkinson, and I learned a lot. And number one is, yes, we need public money, and I think I do not highlight it often, but here I want to mention it. Germany has pledged to double its budget finance, international finance, from 2015 to 2020 from 2 to 4 billion euros. And we overachieved it. We were close to 5 billion budget money. And we have announced to increase budgetary support also even to 6 billion. This is budget money, this is grants, On addition to that, we will also with KfW and others provide loans. So I just mentioned it. When I'm now talking about the need to get the private sector involved, it's by no means that I would move away from our public obligations that we do have. But if we want to reach the trillions, it's impossible to do it with budget money. And even if it were possible, it would not make any sense. We need to make the private investments the normal business case. And so now what are the obstacles? And I learned a lot. I mean that developed countries were not able to reach the 100 billion in due time in 2020. There were quite a number of reasons. But one reason was that the leverage factor to mobilize private capital from public money was lower than we ever expected. And there are quite a number of reasons, some sitting in the developing countryside, where they have to sort out something, but some sitting on our sides. And therefore, we need to make it easier for private capital to come in. And funds are a perfect tool to do so. The Ministry of Environment was involved and engaged since 2009 in that. But now with MCAF, I think we have a new car, maybe a fashionable e-car. Huh? And we can do more with that. And just to mention a couple of points. Number one is it's increasingly important to synergize and to address mitigation and adaptation at the same time. So that is one asset of this new fund. The second one is even more important. We have to find ways to lower risks. And there are certain ways to go, but the way we are going here, to cover the risk of first losses by the fund and with the backing of public money. That is, I think, something very, very important to lower the risk, and by that to get more private capital to be involved. So very happy to be part of that with 25 million, as I've seen. I hope, apart from our Benelux friends, very happy to be at your pavilion here. More and more will come in, because these are the engines we need to drive to our 1.5 target.
As you say, thank you very much. This is, if there's one message coming through loud and clear from this pavilion, but all over the COP, it is that we simply can't do these things on our own, and these kinds of partnerships are going to help. Let me ask you, Carole Dieschbourg, Luxembourg is a small country, but its commitment to green finance has been really huge. I mean, it doesn't start today. But tell us a little bit about why Luxembourg was interested in coming in on this particular fund.
I hand over the mic, but before I do so, I apologize. I know that's not really the type of conversation we want to have, but I am together with this champion for a long, long time. You will forgive me, Carole, and over to you.
Yeah, thank you very much for your support.
Yes, so first of all, it's really a pleasure to be with you, and for this 6th project we launched together, because when I count right with the EIB platform that we made for de-risking this one, MCAF is the 6th project that we run in this area. So it's really about taking the responsibility, working together, and as Jochen said, the most important thing is we want to reach the 100 billion target. We see that there's a gap. But on the other hand, we see that we absolutely need private sector in. And this is one of the things that we've been talking about and we've been elaborating for the last years. I still remember in 2016 at the COP when we launched the first big de-risking project, together with the EIB, together with partners. So I'm really proud to be with you on this. So with Germany but also with Allianz and the EIB. So I think this is really the important thing, to work together. Why Luxembourg? Yeah, because we have a big finance place and we can fight way above the size of the small country, because we are the second, so in the world, but also in Europe. In Europe, we are one of the largest places, the largest place also for funds. So why not use what is there in order to scale up? And as it was rightly presented, it's really scaling up. And that's what we do, because it's not only about meeting the 100 billion target, which we want to meet. But it's also really about the shifting of the trillions. That's why we need everyone on board, and that's what Jochen, I totally agree, I can't say it better. We need projects like this running as our models that can be duplicated, where we can have private sector on board. That's really the most important thing. So for me, and why Luxembourg? Because we have the knowledge, because we have the close contact with our partners, with the EIB, and we have a good ecosystem. And we started early to have a sustainable finance roadmap, to establish networking between the government and you saw my finance minister, the colleague. So we have a Luxembourg Sustainable Finance initiative and a platform together with the government, together with the private sector, in order to really go for sustainability, not only focusing on climate. It's about not only mitigation, adaptations, it's about nature-based solutions, about having people in, and that's what we really want to go for, sustainability, in order to give people hope that this shifting of the money will take place, and we are part of those who want to accelerate.
And as you say, Carole, I mean, you mentioned the adaptation part as well. It's not just about mitigation. Today is Adaptation Day at COP26, and we're hearing very, actually rather emotional pleas from different parts of the world about why that has to get center stage. So it's significant, isn't it, that this fund is also taking on board that?
Yeah. So adaptation is really, if you look at the data we have, we see that we have to do much more on adaptation. At the moment, on a worldwide scale, is 2080. In Luxembourg, we have 50-50. So 50% going to mitigation and 50% to adaptation. It's a balanced approach. And I totally understand, and we see each other. If you look at the world, fires, floodings, coastal area devastated, storm. So adaptation is key in order to give people hope that they can live in security. So I think what we have to do, and we define this in our strategy. So we have a revised strategy which passed the government in summer this year. It's really key to work more for adaptation, make people-centered choices, have local communities in. For us, we have a mainstreaming of a gender issue, also key if it comes to adaptation, but also human rights is totally in. And if you speak about adaptation, one key word I would say is really nature-based solutions.
Yes.
Also something where we really can have benefits, because we're also fighting biodiversity loss. So there we can create win-win situation, and especially in adaptation, the part of de-risking, so governments taking the first loss guarantee, is something that I would like to highlight, because everyone knows that mitigation, investing in renewables, that's quite a business case. But if you speak about nature-based solutions, about adaptation, that we have to getting more resilient, which is of utmost importance to a lot of people, that's really there we have to work in order to see how finance flows, how we can have bankable projects, how we can have people in investing into the right direction. We're not yet there. That's why we need your experience.
Yes, absolutely. And thank you for helping me turn over to my left here from the financial institutions. We've heard that in many ways this fund is building on existing partnerships. Germany is working very closely with both KfW, the EIB. You've been working very closely as well with the EIB on the Luxembourg Climate Platform as well. We also have the Nordic Development Fund joining us digitally there as well. So I'm just going to bring you in, gentlemen, if I may. I mean, can I start with you, Vice President Fayolle, and ask you, to what extent do you see this emerging market climate action fund as a natural step, in a sense, for the EU Climate Bank and the kind of ambition that we've been reaching for recently?
Well, thank you, Shirin. Actually, I'm not going to be very original, because I will repeat what previous speakers, in particular Minister Dieschbourg, have said. For me, there are three key elements that are in this initiative. The first one is it is a true public-private initiative, and when you look at, it is absolutely true that we know that we will not reach the targets if the private sector does not finance projects. And the private, in fact, sector will not finance the project if the public sector is not there, in particular, to de-risk part of it. And that's what this initiative is about. It is about providing first loss piece, second loss piece, so that it can, to some extent, de-risk the financing from the private sector. And private sector will bring what is absolutely essential, which is leverage. So it can increase the size of what we can finance by the combination between the public and the private funds. The second element that I think is very important for this fund is that it is completely Paris aligned. And it is aligned with the objectives and with the principles of the Paris Agreement. And that means that all the projects that will be financed through this initiative will have to meet the criteria set in the EU taxonomy. That means they have to be to bring basically a significant contribution to the objectives of the taxonomy, and that for the other objectives where they don't bring a significant contribution, they at least do not significantly harm the objectives of the EU taxonomy, and I think this is also very important. And the last very important principle that I see in this initiative is the partnership. It is a partnership with several private institutions. You see here, of course, Allianz, but also Folksam. You see also the public institutions like EIB and ourselves. You see the political world that is supporting it, the governments of Germany and Luxembourg, and you also see that the Director General for INSPA is there. So it means that the European Commission also is completely supporting this initiative, and for us it is extremely important because we are based now on the policy first principle, and we need to see that as really a joint initiative and a partnership. And I think for all these reasons, we can be very proud of this achievement. So congratulations to those who have made that possible, and congratulations to those who have especially worked hard to achieve this.
Thank you very much, Vice President. Hans, will you forgive me if I bring in Franklin Henrik from the Nordic Development Fund there, because I don't want you to feel left out just because you're online. So Henrik, tell us a little bit, what was the rationale behind the Nordic Development Fund in getting involved in this new Emerging Markets Climate Action Fund?
Thank you very much. And the Nordic Development Fund is very pleased to participate in the launch of MCAF today. And for those of you that don't know, NDF is the joint Nordic international finance institution focusing on the nexus between climate change and development in lower income countries and countries with fragile situations. And our sweet spot for investment is engaging in early stage project design and structures, both on the public and private side, and also to enhance catalytic finance for impact and scale. So investments in renewable energy, energy efficiency, circular economy, sustainable transport, forestry, land use are key, with important both mitigation and adaptation co-benefits, but most importantly to achieve the sustainable development goals. And in developed markets, like in Europe, for example, many market or institutional investors have long been investing in these segments, but in the countries that MCAF will target, these are still perceived as very high risk areas of investment. So as a concessional financier funded by the Nordic governments, one of NDF's roles in the climate finance landscape is to de-risk and leverage much needed private and institutional investment. And funds focusing on lower income countries are typically too small for institutional investors to invest. Sometimes they may lack the in-house resources to evaluate and manage such investments. So a tiered blended finance structure like a fund of funds is like MCAP is therefore very important and can play a key transformational role in also shaping the market by leveraging institutional investments to enhance impact and scale. So NDF is therefore very pleased to provide a 15 million euro contribution to the fund, along with our like-minded partners, KfW and the government of Luxembourg. And as mentioned, this will crowd in institutional investment from the EIB, Allianz, and also the Swedish insurance company Folksam, which is, of course, very encouraging from a Nordic perspective. And we are particularly pleased to join forces with the EIB, which is often referred to as the EU Climate Bank. In addition to a significant financial investment in the fund, it will also provide very important financial investment advisory services, which will build on its experience from the predecessor fund, the Global Energy Efficiency and Renewable Energy Fund, GREF. And this will ensure that both climate mitigation and adaptation aspects are at the heart of MCAP's origination and management decisions. And the NDF team, under the leadership of our program manager, Alexi Lumijärvi, has engaged closely with Allianz and the partners to make sure that important aspects like gender, environmental and social safeguards, results and impact monitoring is at the heart of the fund. So we look forward to engaging further ahead, and again, congratulations on this important achievement. Thank you.
Thank you very much, Franklin. And we're going to be hearing from the private institutions in a moment. But first of all, let me ask you from KfW, Jan Martin Witte. We heard the minister earlier, the Secretary of State to be exact, from the German Environment Ministry, saying how important KfW is. And we are building very much on existing partners. You as multilateral development institutions understand very well the importance, don't you, of the private and the public partnership not in an end in itself, of course, but in mobilizing action for climate. Was that what interested you in this fund? What was the thinking behind KfW's involvement? We get your microphone up. Here.
It's on.
Okay.
Very good. Thank you, Shireen. Thank you for the organizers for including me today.
Thanks.
Yes, indeed. I think the blended finance element in that fund really attracted us. I think for those of you who don't know KfW Development Bank, which I work for, which works on mandates from the German federal government predominantly, is one of the leading impact investment investors worldwide. We currently manage around 4 billion euros in impact investments that we have made into funds. And 80% of that is in the form of first loss investments that we make, with support from the European Commission, from the German government, from various ministries. So for us, blended finance is not something new. We've done this now for almost 20 years, originally coming out of the microfinance movement, where we, together with EIB and many others, have founded microfinance banks and then liquidity funds and many other structures to support this nascent market. And then we found, oh, look, apart from microfinance, there are many other areas where this particular model, trying to leverage private capital into things like infrastructure and most importantly, climate, really, really works. And so for MCAF, when the idea came along for us, the attractive bit was really three parts: new partners, new leverage, and also new standards. New partners, why do I say that? When I look back at our impact investment and blended finance business in the past, we used to work a lot with our friends from the DFI community, and then there were a few sort of specialized private investors, the GLS Bank, Triadas, all these good guys who were really innovative and pioneers from the private sector in putting private capital to good use. And what we see now, and that's a very positive development, is that mainline insurance companies, institutionals are becoming interested in this sector and interested in these structures. And in as much as we are sometimes difficult to work with, and I apologize to AGI and all the others, I think it's a great partnership to have. New leverage, why do I say that? In the old days, I think most of the blended finance structures were quite disappointing, and I think Jochen pointed out to that as well in terms of how much bang for the buck did we really get by investing our first loss. I think we're now moving along where I think, institutions and insurance and other private investors are becoming more sort of comfortable with the asset classes that we look at in emerging and developing economies. So we're moving from leverage from 1 to 1, 1 to 2, to in certain structures 1 to 3, 1 to 4 at the fund level. And that's also important if we really want to bring the billions and trillions to the table that we need in order to address the climate crisis. and new standards. And I think the Vice President has already alluded to that. For us, it's really important that impact comes first in these structures and that these conform to the highest possible standards coming down from the EU taxonomy, Article 9 requirements, but also aligning with all the mainline standards that you want to see, be it IC performance standards, OPIM, and so forth. So for us, that was really the attractive bit, bringing MCAF to life.
First of all, I'm just going to say thanks very much, Minister Dieschbourg, for joining us. I know you've got another meeting, but thanks so much. And thank you for all your support for everything you do on the climate. And I just want to quickly come back to Vice President Fayolle for a quick word.
Yeah, thank you. Just for a second, just to apologize to our friends from the Nordic Development Fund, because I forgot to mention them in the initiative, but it is great to have the NDF part of this project. And secondly, this is such a great initiative that we hope and think it can be replicable.
Yes.
That we can, do other initiatives also the same kind with other partners. So that's something that I just wanted to stress.
Absolutely, that's a very important point. Scalable, but also replicable. Let me ask our colleagues now from the private institutions to join us in this conversation, bearing in mind that we're a little tight for time, so I'm going to ask you to be very disciplined and short in your answers as well. We have with us, of course, as we've said, Matt Christensen from AGI. And I want to ask you, Matt, why did AGI partner or decide to partner with the EIB on MCAF as a new initiative?
Thank you for the question, and great to be here virtually with you. The short answer is the scale, and I think it's come very clear from all the different speakers that we've had about what this requires to be successful. We need strong public-private partnerships. The scale allows us to get that leverage. We talked about that 1 to 3, 3 to 1. And this is, I think, the blueprint for if we look at the next 5, 10 years coming out of these types of COPs about what can finance be. And the idea that the development financial world, which has done so much over the years on really looking at emerging markets, being first into these areas of higher risk compared to, say, private capital, by thinking through innovative solutions such as this, we start to have, in a way, an evolution on what each role can bring in terms of crowding in and actually having the private capital start to play a much more significant role going forward. But it wouldn't be possible without trying to come up with these innovative solutions and moving forward together as a partnership. And as Martin said, it's taken 2 years from those early conversations to put it all together. It's not easy, but with each successful outcome and launch, such as we're doing today, it should be easier for others to say, hey, hang on a second, how do they also get involved and start to be part of the solution to really meet the financing needs that we have in the emerging markets around climate change?
Thank you very much for that, and for your brevity, I must say, full marks. Carsten from Allianz, let me ask you, for your perspective here, to what extent do you think, actually as first movers in this particular fund, this could also encourage others to follow in the private investor space?
Absolutely. If I would like to break the record of being short, I could say everything has already been said, except not by everybody. So I will not repeat what has been said. But clearly for us, with the 800 billion insurance assets under management and being committed to net zero as part of the Net Zero Asset Owner Alliance, this is a great tool to get our money employed in a way that it fits our institutional constraints. The de-risking is key. And I think the structure we have here with private-public partnership is not new, but in the last years, it was really an uphill battle. It's great to see more and more coming now. And I hope that this creates a further dynamic in the future, because the private money is there. It now needs the public money coming in form of these leveraging constructions. And that clearly is a great success. And thanks for all putting this together. Hopefully the next one will not take another 2 years. And also we will find more partners around the private, but as well as on the public side. So I hope that was short enough.
Yes, and actually speed, urgency is one of the key messages coming here from the COP26. If I can ask you, Michael Keller from Folksam, apart from the motivation of your institution to get involved, to what extent do you think this might be able to help that necessary movement of, you know, trillions, billions of money, particularly from the developing countries, which were promised to emerging markets and the developing world, which frankly they feel quite sore about the fact that we're behind on that commitment?
Yes, thank you. I think this MCAF investment opportunity will be an inspiration for other investors as well, because we could see it when we started to invest in green bonds. A few of us started to invest in green bonds, and then there was a lot of investors coming in over time. So I think having a strong partnership like this, like with EIB and Allianz, to put a solution on this, like this, on making it possible to invest in for asset owners such as us, is going to be crucial to have the scalability.
Thank you very much, Michael. I'm sorry not to hear more from you, but I know I'm very keen and very happy to be able to invite Koen Doens, who is the Director General of the International Partnerships Department at the European Commission, to help us conclude this session today. We are, of course, all working towards a globalization of the Green Deal. We're policy-driven, and we're all part of the European Union. So, Koen, can I ask you perhaps to tell us your perspective on this particular fund, but also in the broader context of what the EU is doing here at COP26?
That's a very broad question, Shireen.
I know, I'm sorry.
I would need 15 minutes for that. But just a few points. I mean, first of all, obviously, very interesting discussion, which in my view absolutely matches the kind of political discussion we're having in the broader sense. One of the things that really struck me, I mean, this week in the COP26, is basically, I think it was Shakespeare who wrote it, saying that if money goes before, always do lie open. And I think that the whole focus that we've seen on climate finance and the necessity to mobilize funding, if not, we will not be able to bring the global community along with us in this fight against climate change, is absolutely essential. And I think that, and some of you have referred to the GREF, I think when 14 years ago we started with the GREF, and Commission, as you probably know, was one of its biggest contributors. I think if we look back at it, it's really been a success story, a successful example of this kind of public-private partnership. And I think it's very good to see how with this new initiative, the EIB, Allianz Global Investors, all the other partners are now really building on this with MCAF. And I think it's excellent, goes in the right direction. Maybe two extra points from our point of view. I think, first of all, we clearly see the broader politics of it. I think if you look at how building the kind of sustainable societies, climate neutral societies and economies that we're looking at, this will be massively disruptive. And I think it's like moving from steam to electricity, or from internet to artificial intelligence. I mean, our times are going through massive disruptive changes. And that means that if we don't muster the kind of financial clout that only the public and the private sector can bring together to accompany our economies and societies to make that transition, it will never work, or it will create real havoc in our societies. And so this kind of initiative is crucial. It, by the way, brings me to a point that I think the Luxembourg minister made, which is that it's essential that we therefore look not just at mitigation, but also at adaptation. If you look at mitigation, I mean, the costs of electricity from solar or wind have massively fallen. If I compare it to 2010, start of GREF, and now we're looking at cuts by 35, 50, even 70%. This is going to go on, but the cost of adaptation remains very high. And I think that with these initiatives, we should look at mitigation and adaptation. And my third point is, of course, that the European Union, and we've been driving that as a Commission very strongly, wants really to lead on this kind of climate neutral, net zero by 2050 drive. We do that internally with a whole set of policy, legislative, operational, financial steps, but we're keen to support also our partner countries. We're working now, I mean, we've adopted this strategy for financing transition, so sustainable finance strategy in July. We are now working more specifically on the external side of it, so sustainable finance strategy for low and middle income countries. And we have, with our new budgetary cycle under our Global Europe instrument, also equipped us with, let's say, more means than we ever had to basically work with partner countries, including through innovative financial instruments to get that going. So very exciting to see all these initiatives popping up, and you can certainly count on the EU and of course on the EIB to be major supporters of this. I'll stop there. I hope I ended on the right side of your equation.
Yeah, no, absolutely, more than enough. And we like the Shakespeare quote as well. Also, obviously, KfW and all our partners here today, thank you very, very much. This is obviously a very timely initiative. And as our Vice President said, replicable, scalable, and hugely important. So thank you. For those of you who've been watching online, sorry we haven't had much time to take questions, but I would like to say that on behalf of our partners, the EIB is happy to take your questions on info@eib.org or on the digital platform that you're joining now. We'll shepherd them off to whoever you ask. But for now,